Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We're just experimenting a little bit here on these free videos, and I just wanted to wait to make sure the video kicked in. I don't know if I started that on time or not, but anyway, we'll probably have to work with these intros here for the next few episodes to make sure we get it down. But anyway, welcome back to the frivolity. Um, Crazy market, of course, up and down like a you know what. And I like to put together a nice little chart deck for you guys here. We actually had Julian on Thursday does the baby powder report. So Julian walked us through how he's looking at the market right now. And on balance, I think he and I are generally seeing the same message, so that's always encouraging. And unfortunately, for those people looking for bottoms in things like crypto, just be really careful here, everyone. Um, I think I've mentioned, and we'll talk about it more, of course, when we get to it, but I've mentioned of late, we're in kind of that no man's land. We're maybe leaving those no man's land, heading down into actual buying windows. So that might be encouraging. But as we're still exploring here, I'm noticing that um, every time the market tries to bottom, it gets smacked hard. And so that in itself has got to be a bit of a warning sign unto itself. But anyway, let's get through the chart deck here and hopefully give you some ideas to chew on through the day. As always, I like to start off with just a brief commentary about currency. U.S. dollar index is, world hegemony. Whether you like it or not, they're driving the bus right now. And as it stands, I think the dollar index is pretty much range bound. And you can kind of see that the ranges are now compressing. So now we have this as a weekly price chart. So now within this broader range framework, now we have a little bit smaller range. My hunch is that probably compresses a bit more and a bit more. And then we're going to get finally either AB equals CD dump into these weekly gap lows, original market structure bottom, or consolidate, break higher, and potentially creating a scenario for new highs on the US dollar. For now, I think it's just to hurry up and consolidate. I have been talking recently about me warming to the idea of wanting to hunt a British pound short. Really interesting trade location. And actually, if we change this to a line chart, hopefully now you also see things like M's coming in on price through reload zones. Um, been pricing options. Haven't really seen anything that's grabbed my attention too much just here as of yet. But I tell you, I really do like that idea. For a nice probe, maybe back down against these tail lows, that kind of idea. 50% retracements. Um, as I said, the options prices don't really define a trade for me here just as of yet. But we were talking, through daily briefs and, of course, site conversations and with students about what would that British pound short trade look like. And it's interesting how they've rebounded it right back into RLZs, and you can see inside bars are firing, etc. So from a trader's perspective, that's actually not a terrible risk reward ratio. But again, not really finding any options trades that really jump out at me. So I haven't really pulled the trigger on that. But I wanted to make reference to it. I have been talking about it recently here with the public audience. Of course, talked about it in the daily brief again today. If you are a Forex related person and these kind of ideas appeal to you, that it looks to me like it's setting something up there. Risk on, risk off, man. I mean, I'll tell you, it's been all over the map here of late. We keep an eye on this little matrix here to give us a guide as to what to expect. And I put the words over where the markets are when I wake up in the morning, and you can see bonds have backed off through the day. Gold has backed off. Yen's kind of just going sideways here. If anything, I kind of think that maybe the gold and the bond market got a little too ahead of themselves because the yen just on this recent, yesterday's push higher in the bonds and the gold, yen didn't participate. Um, at the same time, too, you can see the risk on proxies are just all over the map here. I was very pleased to hear that the Duke driving the bus here now on the daily briefs, doing a really good job. I'm very impressed with the performance that he's doing for us. Just solid person to work with every day in, day out. And what a surprise he told me, well, Brian, nothing's really changed here on my trading plan. I'm still long my oil, and way to go, Kevin. Oil making a new high here. You're the man. I bought into a few different oil names, and I noticed most of them are just sort of floundering a little bit. Natural gas came off here a bit. But I would imagine, maybe we ought to keep an eye on things like Halliburton. It's interesting, as the market's moving up, and these are all sort of my plays that I've got on the books. I really like this Ring Energy. You can see the weekly bottom. They actually came out with earnings that were very positive. All they've done is just backed it up against the original double bottom. So, and if you're looking for energy proxies, man, I really like that ring. Not so impressed with the Gulfport, but I'll risk against the bottom end of the range. We'll see how that goes. But like we were squawking in public forums about things like Halliburton recently and how it carved out an outside upside reversal. So, it's not a bad idea just to keep your eyes peeled in that energy space for names that are Wing out. You can see, look at the weekly W trying to form on that Halliburton now. So there was that monster outside upside reversal, and you can see the market's just slowly grinding its way higher. And if crude prices are pushing higher, then it wouldn't surprise me if this thing does work higher. Can I be a buyer here today in the face of that momentum and volume? I don't think so. But no reason why we can't start building our energy shopping list. Like my little ring has that weekly W. Halliburton doesn't even have it yet. But we'll be keeping an eye on energy names. We've got this montage as well. There's nice big fat weekly W. If I can get a pullback into support, might be interested in that guy. Um, so, point I'm trying to make here: risk on, basically up at the top of the range. We talked about things like the S&P stock market hasn't broken yet here, and it's kind of a pain in the butt. We were looking at things like relative strength studies on the S&Ps, and we don't. Yes, we've broken fast momentum lines, but we haven't emmed out here yet. So momentum really hasn't broken, and like you see in price, it's just a V top with insanely big tails, big gaps all over the place. This has, everybody watching the YouTube page should remember that Brian likes these M's. So I want to see some sort of structure up here. I do like the idea of buying puts. Interestingly enough, actually, we had a special assignment for the level threeers trading and pricing options. Yeah, this is the Russell 2000, the small cap stock index, and you can see how it already has its M top working. It's come into reload zones, just like that British pound chart I showed you a second ago. And it's kind of waffling here. So, and they always say that small caps lead the market. So maybe this is sort of like a harbinger of what's to come out of risk. Tough to say. But the big indexes haven't broken. And like I said, with crude pressing higher here, my feeling is that maybe this has more to do with politics and what's going on in Washington rather than anything else. And is the trade war on? Is the trade war off? Is there more ammunition for the politicians to go after the executive and try and kick him out of office? That kind of talk. Um, and of course, I'm continually puzzled by the recent complete disconnect of Bitcoin from this sort of risk on message. And, students of the market, you can see Bitcoin is working its way lower here. I'm learning always, and I'm very curious as to what's going on in crypto and whether it might be a harbinger for risk on going forward, or whether this is just completely not correlated. It's a good study for us at the very least, just to see what's going on, since we've had this original M that came in about beginning in November. The disconnect has just been violent. And of course, there's some people in this community that would say that Bitcoin is heavily, heavily manipulated, and it shouldn't be considered in these risk-on studies. I'm still a student in the market. I'm still sort of humming and hawing, trying to figure this out. I don't think I've landed one way or the other, but nonetheless, it is what it is. So risk on. Crude's catching a bit. Stocks are still up at the top of the range. They haven't broken. Risk off. Interesting, of course, this bond market does have this big honkin' M working here. So counter trend rallies seem to be running into a bit of resistance against this previous high here. We kind of showed you recently that bond chart just looks like, chop suey. Gaps all over the place. So we're gapping lower today. Could we easily come back down and fill all this in? Sure, no problem. I think the thing that really jumped out at me about the risk off assets was, I always think it's a good idea to sort of base all sort of conversations on currencies. Currencies lead everything. So, when we saw the other day, like I had said earlier, gold and bonds disconnecting from the yen, I was kind of like, I don't know. And then I looked at the actual gold and yen charts, and I noticed, hopefully everybody can see this, that all we did was just bang up against these downtrend lines. Bang, 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 rejected. And bang, bang. Oh, try to get through there. No, bang, rejected. So, clearly, I think the message is pretty simple. Get on the other side of these trend lines, show us some structure, and I think you got yourself a bull market. But until that happens, better just, temper your enthusiasm. Um, risk off is coming off here. It's fascinating that the stock market is just floundering, and of course, Bitcoin can't buy a friend right now. All right, so moving on, and actually, for whatever it's worth, I am sort of warming up to the idea of seasonal plays in the gold market. This one's been sort of a favorite of mine for a while now. It was found by an old site member. We looked at it back in here. Some site people enjoyed a nice rally through that. Then we were looking for the pullback against the lows. You can see the gold stocks themselves, we like to follow Barrick. It broke its downtrend line. The question is, do we actually structurally turn back up here? It's kind of choppy. You can see the big gold and silver index. It broke the trend line and is trying to W here again, choppy. One thing I do like about this Alio that and sort of the reason why I pulled the trigger, we did break the trend line, come back down, test the lows, and we put in a cute little W through 80 cents. So I went and picked some up. This was also an outside upside reversal bar. That was pretty promising. But I think that, until we see the gold market really recapture that 38.2 and that trend line, and until we see, the big gold stocks actually put in W's right now, V bottom, and until we actually see solid W's out of this kind of stuff, I'm thinking Alio here is just sort of caught in a trading range. But I did want to have some of this on the books. I do like this, and I want to start accumulating metals names. And in this case, I'm just going to simply risk against these historic lows, which is like 73 cents. So I take like 10% risk. So just an FYI, I think I had mentioned that before, but I am watching. And I did buy a little bit of this Alio here recently. We'll see how it goes. And like I said, if we lose the lows, you've seen how I operate. I will be the first guy to tell you that I'm stopped out. All right. Think I'm going to leave stock market chatter at that for today. Obviously, crypto and Bitcoin had a pretty big evening. Julian's baby powder report. He's basically like everything on higher time frames is pointing down, so I don't have any reason to be hunting longs. Um, I was interested in this PRZ. It just so happened to line up with a 78.6, and I did have small signs of divergence coming in through here off the lower time frames. And so I did actually take a very small shot. It wasn't a hell of a lot of money. Just probing. I like to call these like probe trades. This was point 0.2 Bitcoin, something like that. Just simply wanted to sniff out whether this actually was a bottom, and the write up on the site, and I do all these report these trades now on the site. We're filling out this new trade reporting system, but there it was, this El Tanguinator, basically divergence W's, 50% levels 2 to 1 risk, that kind of thing. And the simple message was if we broke key support, and you can see the chart, it's pretty straightforward. If we break this key support level, there's the W. Pick some up on the W, added a little bit more on the reload zone. Just simply said, look, if we break these lows, I'm gone. And sure enough, and of course in wonderful crypto and Bitcoin fashion, I got a nice little alarm middle of the night. Get the hell out. So I took a little stab, kind of like what I did against the previous weekly low there, but was proven very wrong very quickly. And so just, walked away. No harm, no foul. So that's basically, and this is an excellent analogy of why you better obey your stops, because if you hadn't, that was basically the reference right in there, and kaboosh. That's why you better manage risk, right? Like I took my long shot. My average cost was pretty much right in there. I risked to there. And had I not acted, holy crap, that could have been nightmare central. So, if anything, and it's a trader's life, operating off of lower time frame charts. I'm not going to sugarcoat it. I definitely know that schooled the public that, based off the higher time frames and for, investors and moms and pops, this was a horrible trade location. And sure enough, there just nothing came in. Um, I think you can start making the argument as we're coming against key lows. Where's the best chart to show you? Whereas I had my fun. Actually, I can put that away now. Might have been, nope, not that one. Yeah, here. So here is our talk, and really this is the kind of chart we should just concentrate for you YouTubers. No man's land. Basically, wicks need to be eaten, tails need to be eaten. We went up, ate a bit of that wick, came down. Now we're eating a bit of this tail. I guess the question at the end of the day is, do we actually go and break this low? As it stands right now, I don't see any reason why not. But I'd also said, for the free YouTubers, for us to even be thinking about higher time frame bullish, we're going to have to get this candle to finish. Then we have to get another candle, and it's a weekly chart, so a full week where we just sort of calm down. And then the week after that, if we go up through that high of whatever that calm down week is, then we can start thinking, okay, well, we got some bullish setups to work with off the higher time frames. As it stands right now, we got nothing here. And so higher time frame players, you really should just be sitting on your hands. As I sort of pointed out there a moment ago, the weekly moving average system actually just went negative. So it really shouldn't surprise us that we're seeing downside. And if we look at all of them, Ethereum crossed way back here, coming up against those lows. Be careful. Litecoin crossed way back here, coming up against those lows. Be careful. There's nothing really for me to say, oh my God, this stuff is bullish. And here's the weird thing that's going on in the market right now. If you look at these bigger coins and you look at things like moving average systems. Here's Litecoin, Dash, XRP, Ethereum, EOS, XLM, Tron. I mean, there's no green here at all. It's brutal. So be careful here, everybody. And what I was saying in the daily brief today, and it was something that somebody brought to my attention here recently, was